$5,000 for a single ounce of shiny yellow metal. And if you've been anywhere near the trading space, you know XAUUSD, also known as gold, is something that all the traders love to talk about. It's on all the charts, all the trading communities. It's on the news, and it usually makes the headline. So in this video, I'm going to explain to you why gold is having its moment, because understanding why gold moves is just as important as knowing how to trade it. I want to break down what you actually need to know before you get into the market, because gold is incredible if you know how to use it, but it also can be extremely humbling if you don't. So what's going on, champions? It's your girl, Megan Savage, and welcome back to volume 2 of my Quick Start Trading mini-series. If you haven't watched the first couple episodes, make sure to go give those a watch. And if you are completely brand new, then I know you have not watched my volume 1 that I did back in 2025. That's going to break down the fundamentals that you need to know in order to get started in the trading space. It's going to tell you what Forex is, it's going to tell you what a pip is, all those basics, all the beginner stuff that you need to know. I'm going to link that down in the description below. But so far in volume 2, we've already went over what actually makes the markets move, as well as what market is best for you. Now, knowing all that past information, it's going to make this video make a lot more sense. First things first, what is XAUUSD and why does it look like somebody fell asleep on the keyboard? XAU is an internationally recognized symbol for gold. It comes from the Latin word for aurum, and if you ever took chemistry, you know that gold is also known as AU. XAU just adds the X that the financial markets use for a commodity symbol, and USD is obviously the US dollar. So XAUUSD is simple. The price of gold expressed in US dollar. How many dollars does 1 ounce of gold cost in US dollar? That's the price of gold right now. That is your XAUUSD price. As of 2026, that number has been sitting anywhere from 4,100 to about 5,500 USD. And this is very dependent on the week. And 12 months ago, it was around 2,600. I'm gonna let that sink in. Gold went from 2,600 to 5,500 in roughly 12 months. That is over double. And this is one of the most dramatic runs in gold's history. So before you even try to trade it, we're gonna figure out why on earth this is happening. Now, there's 4 main reasons on why gold is going absolutely buck wild right now. And they're all happening at the same time, which is why it's so significant. Reason number 1, geopolitical uncertainty is at all-time highs right now. The world is genuinely uncertain. Geopolitical tension among multiple regions, trade disputes. Political decisions from governments are making investors extremely nervous right now, especially over what's going to come next. And when the world feels unstable, investors do one thing. They run to gold. Gold has been considered a safe haven for years. I'm not talking a couple, I'm talking thousands of years. When paper money feels risky, the government feels unstable, when the future feels unpredictable, people buy gold. It has held value through every war, every economic collapse, every currency crisis in modern history. And right now, uncertainty is not just high, it is persistent. It's not just one specific event and then it's over. It is sustained environment instability. Reason number 2 is central banks around the world are buying gold at record levels. Now, this one is massive and a lot of retail traders do not pay attention to this. Central banks, which are institutions that manage entire countries' monetary reserve, have been buying gold aggressively. China, India, emerging markets economies across the board. They are diversifying away from the US dollar and buying gold instead. Why? De-dollarization. It's a global going trend. Long story short, countries are going away from the US dollar, and gold is their alternative. It is no one's debt, it cannot be printed, it cannot be sanctioned, and it is universally accepted. So when central banks want to hold something that's not dependent on a single government, they will buy gold. Now, when the biggest buyers in the world are buying something consistently and in large quantities, price will go up, especially if the supply is relatively fixed. You cannot just mine more gold overnight. Demand goes up and price follows. Reason number 3, interest rates expectations. Now, we've covered this already in the economic calendar lesson. Please go make sure to go watch that if you haven't. Again, it's linked in the description. But I'm going to bring it back here in the gold context. When interest rates are high, investors can earn a good return back from sitting in bonds or saving accounts. Gold pays no interest, no dividends, nothing. It just sits there. So when rates are high, it becomes less attractive. Why hold on to something that pays nothing when you can sit in a bond and get 5%? But when rates expect to fail, so when central banks start cutting, suddenly the cost of holding gold becomes less of a disadvantage. Investors pile in. And right now, there is an ongoing conversation about where investment rates are tended to go. And the uncertainty is keeping the gold demand elevated. And reason number 4 is dollar weakness and diversification. Remember that relationship between the US dollar and gold. When the dollar weakens, gold gets more expensive because it takes more of dollars to buy an ounce of gold. There has been meaningful discussions about the long-term strength of the dollar, concerns about US fiscal policy, debt levels, trade relationships. When investors question the long-term dominance of the dollar, they will buy gold as a hedge. Now, all 4 of these reasons are happening simultaneously in 2026. That is why gold is having its moment. Now, here's where I want to get into the trading education piece. Because even if you already trade Forex, Euro USD, GBP USD, whatever pair, gold behaves differently. And if you expect it to act like these other currency pairs, you're going to get bit. Gold has its own drivers. Currency pairs are primarily driven between the relationships of the two currencies. For example, the Euro and USD. Is the European economy stronger or weaker than the US economy right now? Everything feeds into that comparison. Job data, GDP, central bank rates. But gold has its own ecosystem of drivers. Financial crisis, uncertainty, geopolitical events, physical demand in countries like India and China, where gold is culturally significant, and global risk sentiment. When markets are fearful, gold tends to rise. When markets are confident, gold pulls back. This means you need to be aware of micro factors and news events that are going on regarding gold. The economic calendar still matters. That's what we went over in lesson 1 of volume 2 of the trading series. But you're also watching things like geopolitical headlines, Fed language around the dollar, and the global risk appetite. Gold is not a 24-hour market. Technically, gold trades during the Forex hours, but gold really has its own peak volume. When the London session and the New York session overlap, that is when gold is the most active and the most liquid. Outside of those hours can be very choppy and not the most clean structurally either. I primarily trade gold during the New York session, but as you will know from experience, trading gold at 9 p.m. is way different than trading gold at 9 a.m. as well. That will come with experience. And one of the things I love about the gold market is it respects SMC concepts beautifully. Liquidity, order blocks for value gaps, market structure, premium and discounts, all of it works extraordinarily well on gold. The institutional footprint is very clear, and the participants love to leave marks, aka central banks, hedge funds, institutional traders. And considering gold moves in a very big way, the bigger the movement, the bigger the opportunity. However, this also means the bigger the risk if you don't know what you're doing. So before you jump into trading gold, I'm going to give you a couple rules to follow. Like I said in lesson 1, be aware of the economic calendar. Know what's going on before you get into the markets. And don't be scared to take a step out if you are not ready. There is always going to be a setup. Do not let the fear of missing a big move or a big setup make you jump into the markets prematurely. Your job is to protect your capital, not win every time. Number 2 is respect your sessions. You do not need to be on the chart the entire day. That will drive you insane. Have your trading session, respect your session, and study that time and how gold moves. It will be way easier to catch a more of an A+ setup than if you were to analyze it every waking moment. The next rule, watch the dollar. We've already went over the relationship that the dollar and gold tends to have. Keep that in mind before actually placing your trade. And finally, start smaller than you think you need to. And I know I say this a lot, but I want you to keep this in mind, especially if you're trading gold. The movements feel very dramatic and they can be very big. That emotional change can really make an impact on your trading. There is no shame in starting smaller and then sizing up as you go. And if you guys really want, I can do a video on how to scale up if that will help you out. I got you. People have been saying, Megan, are you sure I should be trading gold right now? And I want to give you the honest answer to this question. Gold at 4,000 to 5,000 USD is already in an extended bull run. However, that does not mean that it cannot go higher. JP Morgan has a target of $6,000 and Goldman Sachs still maintains a bullish forecast. However, it does mean you are not buying at the bottom. When you're entering a market that already has a significant move, you have to be a little bit more disciplined and know what you're doing before you go in. This is a momentum market right now, and momentum markets are exciting and profitable when you enter on the right side, but they usually punish those who like to enter late. For traders who understand market structure, gold in 2026 is generally one of the best markets that you can get into. For someone who is brand new and just getting into trading, I personally wouldn't start with gold, and I would start with the foundations and reading price action. But build the skill, and I promise you, gold will be something that you love. And don't let people spread fear to you saying that you need to do it right now because you're going to miss your opportunity. I promise you, I've been doing this since 2021. There's been people that have been doing this a lot longer than me, and they say the same thing, which is there's always going to be another opportunity. That doesn't mean wait and don't learn trading right now if you're brand new. It does take time, and I don't have a crystal ball. So what might take you a year might take someone else 3 years. I don't know, but I don't want you to feel that extra added pressure of I need to figure this all right now because I'm going to miss the market. Blah, blah, blah. The good thing about getting into Forex or futures trading, you can also make money if the market goes up or down. You just need to learn how to read price action, which is why I'm here. And lucky for you, I'm also going to attach in the description my personal Telegram channel. Not only do I answer your guys' personal questions and I give you a little bit more of a behind the scenes of what's going on in a day of life of a trader, but I'll also give you guys my personal forecast on what is going to be going on with gold and some of the other assets. So at least you will have a little bit more of a clearer understanding when you actually want to jump in. If you found any value at all, do not forget to like and subscribe. And thank you guys for allowing me to be a part of your trading journey. We got more videos to come, so do not forget to put your notifications on so you know when they are going to be out. And if you haven't already, do not forget to download the Trading Terminology Bible that I made for you guys completely for free so you can follow along on all the trading terms that you need to know. It's always a blast with you guys. I'll see you guys on the next one. And remember, you're savage, not average.